Hi traders, welcome to this week ahead analysis video with me, John Kibler, Senior Market Analyst. I'm going to take you through some trading ideas in the Forex market this week. Now, it's going to be a really difficult trading week in terms of the data that's coming out. It's going to be so difficult to judge where the market could be potentially going because we've got so many different types of economic data this week, not just traditionally planned data sets that usually drop, like the non-farm payroll change and the employment data out of Canada, but we've got real headline risk this week. We've got French parliamentary elections, which we've just done a little side note over here. We also have the parliamentary elections out of the UK this week, and I will be covering this in a live webinar this week, so keep an eye out for the details of that. So I will be covering that on Thursday, the parliamentary elections in the UK and how it could impact the pound US dollar going forward. But we've got French parliamentary elections happening today. I've just put some notes over here of what kind of it is going on and sort of what is the breakdown that you can be looking for. So essentially, we could be seeing the first far-right government since the Second World War. A winner may be visible by Sunday evening. It depends on how the voting obviously does go. France does have a semi-presidential system, so that means there is a president and a prime minister, and the voting today will determine who is prime minister but not president, because Mr. Macron is already the remaining president until 2027. However, if Ms. Le Pen's party wins by an absolute majority, France would have a government and a president from an opposing political camps for only the fourth time in post-war history, and 28-year-old Jordan Bardella would be prime minister if the party wins outright. So there is a very big political risk going on in France at the moment, which kind of is going to overshadow a lot of the data coming up this week. I mean, we have really important data out of the US. We've got jobs data coming up. We've got FOMC meeting minutes, services PMI data. We've also got Fed Chairman Powell speaking this week. So this is one of those weeks where the market may want to go into more risk-off assets than it would be on those kind of risk-on points. Now, looking at the currency strength meter, we're starting to see a little bit of downside in the Swiss franc coming in from those reversal areas. We're starting to see the New Zealand dollar continue that weakness, which we have been seeing recently. But again, I think this week's going to be very difficult when it comes to determining strength and weakness because headline risk could change. There is a sort of talk as well that the ECB will be willing to intervene if anything serious happens in France and anything serious happens with the euro. So we have to take that into context as well going into this trading week. But let's look at the sort of technicals on the charts then of what's going on. So the US dollar index daily chart is showing us the market is slowly grinding its way higher up into those key swing highs back towards that sort of 106.30. I still like upside to the dollar. Obviously, event risk this week could actually fuel the US dollar slightly. Obviously, then we do have Fed Chairman Powell speaking and FOMC meeting minutes. So if there's anything in those statements which talk about rates not really going to come down at any point soon, then we could see dollar continue to get stronger, despite seeing obviously downside, which we saw on Friday in core PCE price index. However, the revised figure was up, so that's something that might be concerning to those that are looking for the Federal Reserve to cut rates. Going on to Euro US dollar then, so we've got the market in what I would call a balanced trading week last week. That basically means that there was no direction within the market, a lot of volume being built between a very small area, which you can kind of see from this daily chart that the market is going sideways at the moment. But with the elections, depending on how that does pan out, obviously if Macron stays in charge, I actually think this is fairly positive for the euro. No change there, no uncertainty. However, we do see some downside, then price could be moving lower. I'm not going to be personally get involved in any of the trading before that event. Obviously, the market open may gap and things like that, so there's no point trying and front run anything here. But then also we've got UK parliamentary elections coming up this week, and the pound has been selling off a little bit. I like the idea of pound coming down towards 125s, 125.50. This volume that we saw between sort of May and June this year, that is a nice little area where volume saw price kind of come into the market. So I like the idea, or buyer, sorry, I like the idea of price coming to test that zone. But again, uncertainty around this. Market kind of pricing in the fact that Labour are going to be a majority, but I'll talk about this in an upcoming webinar. Dollar yen, is this where the action's going to be? Right, we've got the BOJ potentially looking to intervene, but that is not coming right now. What they are going to look to intervene on is any kind of sharp moves within the market. Now, could there be any sharp moves this week? Absolutely, because of the event risk in the markets. What if the market wants to go and see dollars aggressively and we see a shoot up towards 164s on dollar yen? Then I think the yen or the BOJ will look to intervene, and we could probably see some downside to dollar yen. However, it's very hard to pick out when that's going to happen, and maybe interventions that come in will be brought back up. One key area for me is 157. I think if we see a sharp move towards 163s, 164s, then 157 could be a good area to start looking to potentially fade that little bit of an intervention move. Finally, gold. Gold could be a place where investors want to stick their money this week, simply because, again, that event risk. When there is lots of uncertainty around, the market wants to go into safe haven assets, that being gold potentially, and that may be keeping gold prices supported at this 280 level. I actually think that if we breach this, it could lead to some significant downside in gold. However, we seem to be holding this level at the moment, and to me, if we do get strong political risk, gold could be the market to go and have a little look at, with potentials for the highs to be retested. But it's going to be a very, very difficult trading week. I hope I've kind of explained that within this video. Please be careful with the markets. Make sure that you're not trying to over leverage yourselves this week at all, and make sure you keep risk in line. Thanks for watching this trading video. If you did like it, hit that support button, hit that like button, and subscribe, and I'll speak to you in the next video.